Stock market returns are never guaranteed, but proper research gives you an edge, but risk management is non-negotiable. And this week, the US market rally continues, but fear and greed index is flashing red at 78. Is this a bullish momentum or are we nearing exhaustion? Let us decode everything step by step. US weekly market snapshot. Let us begin with the numbers first. S&P 500 gained 1.72%. Nasdaq 100 was up by 1.48%. Both indices closed at all-time high and the Dow Jones jumped 2.3%. Even the Russell 2000, which tracks small cap stocks, moved up 2.25%, showing strength across the board. So this wasn't the tech-driven rally. It was a broad-based move across major indices. Sentiment, volatility, and breadth. While the prices are rising, so is euphoria. The fear and greed index is now at 78, firmly in the extreme greed zone, up from 63 last week. The put-call ratio based on 5-day average is down to just 0.61, indicating aggressive call buying. And VIX, the volatility index, is now at 16.37, even below its 50-day moving average, suggesting that the traders are very comfortable, maybe a bit too much. Technically, S&P 500 is trading well above its 125-day moving average, showing a strong momentum, but also a lack of consolidation that we will check when we visit the price charts. Macroeconomic highlights. This week's macro trigger was US payrolls report. June payrolls came in at 147,000, sharply above the estimate of 110,000. That is also slightly above the upwardly revised May figure of 144,000. What was the immediate market reaction? Bond yield shot up, 10-year yield climbed to 4.346%, 2-year moved up to 3.886%. And here is the big macro signal. The 10-year, 2-year yield curve spread is now at plus 0.47%. One of the strongest steepenings we have seen post 2022. Historically, this kind of shift after inversion often signals a turning point, and therefore it is worth watching closely. Global market overview. Now stepping outside the US. In Europe, UK's FTSE 100 gained 0.27%, while Germany's DAX actually declined by 1.02%. In Asia, Japan's Nikkei 225 was down 0.85%, Hang Seng lost 1.52%, and India's Nifty 50 fell by 0.69%. The only major outperformer in Asia was China 50, up 2.21%. So the rally this week was US-led, not global. Now let us go to the charts to analyze whether this rally still has legs or if the sentiment is running ahead of the market structure. This is the weekly price chart of S&P 500 index. Let us first understand the price action. It has already taken out the all-time high here. It has made long back, and this was the very serious resistance. Now the price is trading above this resistance area. But I don't see the price is likely to go much higher before it takes a correction or a pullback. Because if you see the overall structure, this is the prior impulsive wave, and this was the breakout of a bullish flag structure. So if we project the target of this bullish flag, 61.8% comes at around 6,360. And if you see this trend line, price has taken support here, has taken support here. Once again, the price has taken support here, and it was broken down over here. So on upside move, this trend line will act as a resistance. Now, coming back to the support area, this is the now neckline of a breakout. So neckline area is around 6,100. But if you see the consolidation here for 2 weeks, the level comes at 6,228. So this zone is a good support. So if it corrects, then this is likely to act as a demand area. Now let us move to the daily price chart. Look at the daily price chart. What is very important to note is that yes, the momentum is very high, but the price is quite overextended with a parabolic rise. This is the EMA 21. So this area is very important. The most important is to understand the price action. Gap number one, and this is the gap number two, which means there are back to back two gaps. So third gap would be probably exhaustion gap, and it is quite approaching to this important level of 61.8% expansion level. And 6028 is an important area that we have marked in the weekly chart that coincides with the gap also over here. And in this zone of support area, there is an existence of EMA 21, which itself will act as a dynamic support. So the possibility of a pullback cannot be ruled out in the upcoming week. This is the weekly price chart of Nasdaq 100. Now, if you look at the price action, there is an existence of a gap. So it has a major support because there are multiple moving averages over here, EMA 21, EMA 55, and volume weighted moving average. Here too, it has taken out the all-time high, and it was an area of resistance where the price consolidated for 2 weeks. Now, in the prior week, it has given a breakout, and there is a follow-through in this week. Now, based on the price action, this happens to be the neckline area 21,872, 22,100 is the demand zone. Now, this trend line is acting as a resistance. So, possibly an upside move, this will act as a resistance. In daily chart also, what we can see, gap number one and a gap number two, which means very soon we might see a third gap, which could potentially be a exhaustion gap. So watch out in the next week, probably Monday or Tuesday, we might see some kind of exhaustion in the momentum and the pullback might take place. Conclusion plus what to watch next week. The US market rally remains strong with broader participation, but the sentiment is now in extreme greed zone and the volatility is quite suppressed. The yield curve steepening is macro significant and could reshape positioning. For the upcoming week, I'll be watching whether the rally pauses as they look quite overextended, any cracks in sentiment or market breadth, and how bond yields behave post payrolls reaction. We may still be in a bullish trend, but overconfidence is where the risk often hides. If you found this breakdown helpful, do hit like and drop your thoughts in the comment section. Do you think this momentum continues or we are heading for a pullback? And don't forget to subscribe, follow. New videos drop every Saturday, 7:30 p.m. Eastern. Learning never stops with DK SINHA.